Welcome back. You're watching Markets at Noon on ET Now. Very quickly, let's welcome now the management of Greaves. Captain Nagesh Basavanhalli, Group CEO and Managing Director of the company, to talk about the strong sequential comeback, and what exactly were the growth drivers, and also, of course, the promise that the EV segment shows for the company. Thank you so much for joining in. So to start with, my very first point, the strong sequential comeback. What led to that, sir?
As you are probably aware, Greaves Cotton over the last 3-4 years started moving from being a single-cylinder diesel engine company to we went about our strategic focus on cleaner technology, moving closer to the customer, moving products to solutions and organizing unorganized, right? Hence, we started moving into fuel-agnostic solutions, diesel plus CNG plus electric. We started getting into non-auto engines, and then we also got into e-mobility play, both through our two-wheeler and three-wheeler play. And then combined with our Greaves Retail and Greaves Finance, which is our multi-brand retail, multi-brand spares play, right? I think that's kind of some of the newer areas. And if you look at our last quarter results, the newer initiatives started in the last 3 to 4 years have contributed to almost 27% of the revenue.
Could you brief us about the non-automotive and the aftermarket business now that it has returned to pre-COVID levels? What kind of demand momentum are you witnessing?
Yeah, so as you can see, right, in our core business, when the auto business was impacted due to shared mobility due to the pandemic, it is the non-auto and some of our other aftermarket and our e-mobility businesses, the newer businesses, continue to do well, right? In the non-auto business, we made a strategic diversification about 4 years ago, and we started playing into the light equipment play, which is like the construction, light construction, industrial equipment, light agri, right? And some of the engine, leveraging our core competencies in engines and getting into some of these different applications where our aim was to improve the productivity solutions for various customers in various other segments, right? That is been a growing play. For example, Q3 21 versus Q3 20, our numbers on the non-auto engines are up by 44%. So that was one key area. And like you mentioned, the aftermarket play too, through our access to the 7,000 retail shops that we have across the country, 10,000 plus mechanics, multi-brand spares. Post-COVID, we are seeing our multi-brand spares and multi-brand service improve post-unlock. So that is again another area where Q3 to Q3 we have seen single-digit increase from Q3 21 to Q3 20. So both the areas clearly have demonstrated growth.
Company has guided for its capex plan for the EV segment. What is the kind of potential that you see from this segment, especially in terms of growth?
So on e-mobility, as you know, over the last couple of years, we got into two-wheeler electric vehicles and then three-wheeler electric, especially in the e-rickshaw side, right? So when you look at it, I think again going to Q3 21 versus Q3 20, right? We had a greater than 100% increase. Partly because post-COVID, we have seen an increase in the adoption. Our retail play, our distribution play increased. So, for example, we now have 300 outlets on the Ampere side, 200 on the Greaves retail side. So, about 500 plus outlets. We have a digital distribution system where during the COVID, we were in contact with our customers online sales happened, a lot of virtual test drives. And so, when you look at our e-mobility and with some of our newer products, we launched the Magnus Pro, which has been received well in the market right in the middle of the pandemic. So newer products going into lithium and higher speed and higher range, two-wheeler and three-wheeler, dealer distribution increase, right? And we are playing in the heart of the market. is kind of some of the reasons why our e-mobility play continues to grow. And we've just announced our capacity expansion in the Ranipet plant that we will be adding incremental capacity in Tamil Nadu.
What is the kind of trends that you have seen? Have you seen an increased bend towards the EV?
Yeah, definitely. So I think if you look at it, right, I mean, when I look at retail sales, when I look at our customers are clearly the millennials and the Gen Zs who like technology, who like the comfort, convenience of an electric vehicle, right? As you know, in India, more than 75% plus of the vehicles are either a two-wheeler or three-wheeler. So when we look at the total cost of ownership, when we look at where we are today in terms of the adoption, the vehicle charging range anxiety is improving, battery prices are getting better, the affordability is improving, and the overall vehicle quality and then the localization levels are increasing. I think we definitely see a good uptick in demand for our two-wheeler vehicles. In fact, last couple of months we've had some supply chain issues. Obviously, commodity prices have been a little bit of a challenge. But other than the supply issues, I think on the demand side, quarter on quarter, we continue to see increased demand.
All right. Is the company planning any change in the products mix going forward? Where does the key focus lie?
Sure. In fact, as you can see, I think post our launch of the Magnus Pro, right, which was a higher speed lithium, we will continue. While we really do not comment on future product strategy, I think it's enough to say that I think our transition from slower speed to medium to higher speed, increased range, lead acid to lithium, and the average increase in the ASP of the vehicle, I think that trend will continue. The localization to Indian component players will continue. So the newer products you're going to see will be more on these lines. On the retail side, another data point that I would also like to point out is we have been very fortunate. We are working with several B2B players in terms of last mile delivery or last mile transportation or cargo or logistics. And we are seeing an increased trend for these application-specific products, whether it is on two-wheelers or three-wheelers. And that trend also you're going to see increase, again, because of the unit economics playing out over the next couple of years.
You know, the automotive engine business took a hit. What were the key reasons? How are you seeing it shaping up with the opening of the economy? Yeah,
I think our automotive engine business, where a significant majority of our engines go to three-wheeler cargo and three-wheeler passenger, right? Definitely, that particular industry is down 60% here today. So, partly because shared mobility is an issue. With the unlock and the confidence month on month, the cargo side has recovered. The passenger side is slowly coming back on as schools and colleges and offices continue to open up over the next couple of months. I think that industry is expected to recover back. But the good news for us is, even in a quarter when our core business fundamentals or the core business was down significantly, our newer businesses made up almost 30% of the revenue, and we are almost on par with the last year's quarter three. So I think we will we expect over the next couple of months and quarter the shared mobility concerns to reduce or go away post the pandemic. But clearly that's an area that's we're watching very closely.
All right. You know what, and we'll have to leave it at that. Thank you so much, Mr. Nagesh, for joining us today on Markets at Noon. And with that, we're out of time. So it's a goodbye from Pankaj and myself. Thank you for watching.